Hey guys, today is January 16th, 2023, and I have four interesting charts. Well, I'm going to present more than four, but for now I have four charts on the screen that I would like to point your attention to. So on this chart over here, we have a weekly time frame, and this is basically the history of Bitcoin since 2011 all the way to 2023. Now, in this past cycle, well, in all cycles really, we've had this kind of blow off top, and then a drawdown, blow off top, drawdown, blow off top. And these are usually marked by halving cycles. So I used to have the halving cycles here, but you can imagine there's a halving cycle here, there's a halving cycle like here, and a halving cycle here. And now there's another halving cycle here by these vertical purple lines. But anyways, my point is I think we've reached the point where a market cycle low is in play. Now, what do I mean by that? I mean that typically we have this, you call it like either symmetrical or like a wedge forming after the top. And then when we ultimately break down, we put in that low, right? Break down, put in that low. Break down, put in that low. Now, if I go in closer, or actually let's use the top left chart as our example now. I generally think that because we came down so fast and so much, that this low is most likely the final bottom low. And I generally think that this breakout that we're having right now, that we exploded about 41% from the bottom, is the start of something new and a new cycle. But it does not mean it will not come back down. So here's an example. You get my brush. We had this start, right? This is where I would say we are now, around this phase. We had an explosive move. We'll probably get an explosive move. My guess is back to 30K, at least. But then we ultimately went back down, right? We traded sideways for another year. Now, if I go here to here, before we made an actual break, it was 441 days. So same thing here, at least 440 days. That means we're not breaking until 2024, minimum. So I generally think we're going to trade sideways for a little bit longer, something like that, whatever, maybe go back down, whatever. This range will be up to you guys to speculate. But I think it's a sideways move, then up, and then it's going to line up with our halving, right? Like our halving. If we go back to this chart, down here, this purple vertical line, and we match it to here, it'll be somewhere over here. And that will give us enough effort to put in a new all-time high in 2024. So I do not think that we're there yet. I generally think there's more to move. Now, in terms of ETH, I want to show you something very interesting with ETH here. Let me make ETH the focus of our video. With ETH, there's something really cool with this logarithmic regression. Sorry, let me get this phone off. Oh no, I got signed out. There's something generally cool with this logarithmic regression that we don't have that much data points, so I don't think it is for sure and for certain that, because like here we didn't really hit. We got a nip of it, but it wasn't ultimately the all-time high. But at the bottom, it seems to be way more accurate. Now let me show you what I mean. The breakdown here to this bottom area is something we experienced back in June of 2022, right? And then we had a rally. Right? It didn't quite hit the orange, sorry, what's this orange line? The orange is the 100 week, right? Yeah, it didn't quite hit the orange 100 week. But I generally think that we're in this similar phase here where we had our drawdown. Now we're having a rally, right? And then we're going to still get this low later this year. I don't know why I think that, but I don't know. I'm not buying into the fact that this can't be a bear market rally. I generally think it can, and it has to do with macro conditions as well. Now let me get this chart here out of the way. I want to look at some other interesting things. Let's look at everything that I have. Let's start with the VIX. So this VIX here is really low. And when we enter these periods of like low touching points, this is usually the tops of the S&P 500. Now, if I were to add the S&P here, so let me just see S&P. Same scale, right? Look at periods here of low, top, right? Let me grab a brush. Where'd my brush go? Right, look at this. Here's a low, top. Here's a low, top. Here's a low, top. You know what I mean? Like, look, you can continue. Look, low, touchdown, local top, etc. There's so many points, right? And the same is the highs. When it's high, it's time to buy, right? When it's high, it's time to buy. When it's high, it's time to buy. Oh, well, technically, it was time to buy here. But you get what I mean? These are very interesting, and I believe that it is still going to play out throughout 2023. So it is a good thing to keep an eye on. Now let me look at something else. See the money supply as well. The money supply has been going down. It's been reduced roughly 3% from 22.08 trillion to 21.369 trillion. So we are getting a period of contraction, hence why risk assets are going down. Look at the bond market. The bond yield, sorry, not the bond market. The bond market is an inverse correlation to the yield. So if the yields are going up, bonds are going down. And it's been absolutely killing it, like since the COVID crash, right? Boom. You can imagine that bonds, if I were to put in here the 10-year bond, I don't even know what the symbol is, but just imagine that it was inversely correlated, right? Now let's keep going down my chart. Let's see. So the US dollar, I have this beautiful parabolic curve drawn, and at this moment on my Instagram, I made a call that, oh, that's it, folks. We lost this. It looks exactly like Bitcoin. And what I meant by that is, look, if I were to show you Bitcoin here, oh my goodness, I hate when that happens. If I were to show you Bitcoin here, we had a similar move here, right? And I was a part of this. So you learn from your mistakes. But there's this curve structure, and then at this point when you lost and we got a retest, we went lower. Here we didn't get a retest. We had the drop, no retest. I was hoping this would go back up or something, but so far it's just been a straight drop. And obviously this correlates with the price of Bitcoin, right? Like if you were to take this time, look at that. As soon as it broke down, bottom, right? That's literally the bottom, right? Let me show you again. Broken down, and then look here, bottom. Broken down, bottom. It's crazy. And then this rally is this drop. There's an inverse correlation between both of these asset classes. So that's important to look at. What else can we take a look at? Gold. Yeah, gold's been rallying. Similarly, gold has been increasing as the DXY has been going down. Still in this trend though. I was hoping we would break this trend last year, but we never did. Especially how it's double top. But people that are accumulating here are laughing, right? Because it doesn't matter where you buy here if the price is here. Same with here. It won't matter when you sell if it does end up going here. Because I don't think gold's gonna go to new all-time high anytime soon. That's just me personally. But yeah, let's continue watching. We got some other stuff. So the NASDAQ has been absolutely crushed. I mean, tech stocks have not been doing well. If I throw in some indicators on here, I'm not a technical analysis, but I do like using the occasional indicators, right? We've never lost this 200 week before, right? Held it. I guess here you could say the last time, oh, this is interesting, guys. The last time we've lost this 200 week, we've had a 63% drop or a 40% drop. So if we fail to hold this and we get an average of, let's say, 40% between, or 45% between the both of them, could be looking at a 6,000 point NASDAQ, which, I mean, is very interesting to think about. That is a good thing to keep your eye on. Let's look at Apple. Apple lost this key trend line for me that now looks like we're getting a successful break, now a retest, and then a continuation or further downfall. I mean, I got targets, not on this chart, but on Instagram I put on targets at least to here. This is kind of like the COVID, before the COVID. So I think it could potentially go here. I know you're thinking, oh, it's impossible, but I don't see a 40% drop out on the cards. It's probably not going to happen, but to say that it's impossible to happen is very arrogant, to say the least. But let's see the S&P. Now, the S&P is very interesting because I showed you the VIX, right? Inverse correlation. The VIX is at an all-time low. So that could very well be the top, the local top of the VIX. I mean, I wouldn't be surprised at all. I mean, the local top of the S&P 500, given that it's the local bottom of the VIX. Because when the VIX is at the bottom, we need to sell, and when the VIX is at the top, we need to buy. But yeah, I think this could easily go back down. So my current trades are on the VIX right now. I think the VIX could easily go back down here to something here, right? And similarly, this is like right before the COVID, so it would make sense. It'll have some confluence. We got Tesla here. Tesla still hasn't hit my target of the pre-COVID times. I think it could hit that 100%. Not 100%, but 90%. Especially if we continue contracting and all that. Now, I want to point to the CPI print. The official numbers did come out here. Yeah, here they are. And it officially came out at unadjusted June, December. I guess this isn't the website. Labor statistics, is it this one? 6.5. Yeah, so major categories got a 6.5 rating of the CPI year to date. So we went from 9.2 to 6.5. I think it's really good, but it's still sticky. I want to show you something else. I was talking about this pretty recently on LinkedIn. If you want to send me a request on LinkedIn, I'll be happy to accept. But yeah, I was basically highlighting that sticky high inflation is very difficult to bring back down, right? And for one of the reasons is that workers and businesses expect high inflation, so they'll demand higher wages or prices to compensate, which could perpetuate the inflation cycle. Another point that I was making is that it takes several quarters for the full effect of rate hike to be felt in the economy. And it can be politically challenging to implement necessary policy changes. We're seeing that with the House between Democrats and Republicans. The internal conflicts within that. But yeah, I think all of this year's accumulation phase. I think we will get a pivot 2024. Maybe by the end of this year. But we need inflation to go back down to 2%. That's the number one goal. We need that. The second goal is we need recession fears to go away, which is like crazy because I just saw this by Johnny. Let me bring this up. Johnny's a good friend of mine. Johnny S. I don't know. I just liked it. Maybe I even retweeted it. Let's see. Here we go. Those are the tweets. So the 10-year in 3 months. So we know that we've had an inverted yield curve, negative 1.18. And that is actually the lowest it's ever been ever. So I generally don't think the bull market's on. I think a lot of this rallying that we're seeing is just relief, right? It's just a relief rally. And I think that we either go sideways for a long period of time like this, or we go back and we retest a low. Now, for Bitcoin, I think that's out of the cards just because we've been down and suppressed for so long, right? Like, we've been down for 371 days. And then typically a bear market, it lasts, 800? Oh, sorry. See, that's why I was like, it doesn't last 800 days. I was tripping. Lasts roughly about 357 days. So we've hit that point, right? And then we had a bull market for 1,000 days, but I wouldn't call it a bull market until we broke out of this. And it's a period of, until we break out that. So it's a period of sideways for roughly 588 days. So I think that's what we're experiencing. We're going to get a 588 days or 480 to 500 days sideways. So it could go up, go down, could go down, go up, just a sideways action. And then we're going to have the halving event, which is sometime around here, right? And then we'll start the bull market going into 2024 and 2025, with the peak being somewhere around 2025. Like if you look around here, right, like this would be the break after the halving. So we're saying sideways, halving, maybe dump initially after the halving, then establish an overtop here, then start your bull market, which will last about a year, right? 469 days, so somewhere around here, and then we peak somewhere here. Nobody's gonna know where we peaked, right? Like last year, I thought we were going at least to 100K. We didn't. 69K. For the last two years now. It's crazy how fast things are going. I did take profits, but not enough. But hopefully this year we can do a little bit better. But what I'm trying to say is we have a year to accumulate. And it's going to be higher prices than usual, lower prices than usual. But if we stick to the plan, which is accumulate all of 2023, wait till the Fed pivots, maybe get some discounts because of those pivots, then the next following year we can start and get, some legs and some foundation under us, build a base, and then explode into a bull market. But yeah, I hope you like this. If you did, please comment, do anything else. I honestly do this just to help myself. If anybody is sticking around to watch, that'd be awesome. It would be a bonus. But thank you. Have a great day and enjoy the rest of your week.